Here comes another big wave of dollar volatility with key inflation data in focus. How is it going to react, guys? Ken Chigbo back with another E8 Markets fundamental update. Let's jump straight into this. So starting off with the dollar, it did finish firmly in the red last week. If you look here on my screen, we had been on a path to the upside with 1, 2, 3, 4 consecutive weeks to the north, but coming under some pressure. And there's a combination of reasons. We had the Fed's chair, Jerome Powell, speaking, where he acknowledged that we've made substantial progress in inflation coming down, which moves us closer towards potential rate cuts. And you would have seen the pricing, the probability has risen to around 70% probability that the FOMC will cut in September. And then we started to see disinflationary signs with, look, with the privately conducted payrolls number, only 150,000 jobs being added. The unemployment claims ticking higher again. So the amount of people claiming unemployment benefits ticking higher. ISM services PMI dropped into contractionary territory. So anything below 50 is contraction, above is growth. So poor data there. And then when we look at the key labor market data on Friday, average earnings cooling down to 0.3% as expected, and the unemployment rate ticking higher to 4.1%. That's all disinflationary. Remember, if we get in a worsening in the labor market, effectively less people in jobs, less wages, i.e. people not getting paid enough, okay, that's starting to come down. That's disinflationary, because if the labor market is not solid, right, we haven't got people out there spending to stimulate inflation, stimulate price of goods and services. So that is supporting disinflation and getting us closer towards those rate cuts. So if you look here for the dollar, we're coming up for the Dixie, coming up to a very big test of a trend line. And remember, this trend line has supported the price to the upside since the commence of this year, because we've seen pushbacks on rate cut bets. We've seen decent data from the United States supporting the greenback to the north, but now we're coming up for a real key challenge here around this mid 104 region. Are we going to get, this is a make or break moment for the dollar, and we either make or break depending on, we got commentary again from Powell. Okay, it might not differ too much from what we saw last week, where he already acknowledged substantial progress on inflation coming down, but we're going to keep an eye on inflation, i.e. CPIs expected at 0.1% on a year-on-year, which is key, okay, is expected to cool down to 3.1%, all right? So if this inflation data does cool this week, that's going to further support dollar to the downside. Now, there's also expected to be quite a substantial amount of volatility around the euro given the French parliamentary elections. Now, by the time you watch this video, the results should be out. Now, in terms of reactions for the euro, as you may have seen, look at my chart here, first of all. You would have seen this big drop to the downside here for euro at the early part of June. Okay, we're heading to the downside, and that's because the French government lost a lot of traction in the European parliamentary elections, right, to the far right in France, to the far right party. So they announced snap elections. That's why we've got these elections underway. And the far right, historically, with any sort of politics, they're seen as quite radical changes. It's a lot of uncertainty and worry for markets. So that's why we see the relating currency coming under some pressure. And that's why euro was heading to the downside here. Now, depending on the reaction, should the far right gain majority, which isn't largely expected, but if they gain the majority, pull the surprise off there, euro's going to be under quite a substantial amount of pressure to the downside. But if they don't gather enough support and there's a hung parliament, then that's a better scenario for euro, and it will support some momentum. But I'm just keeping you guys in a loop with this, because we're price action for euro could be a little bit choppy, because if we do get a hung parliament scenario, there's going to be a lot of negotiations going on to try and form a government coalition, so on and so forth. So just keep that in your mind. But when we look here at euro, it has staged a massive rebound, taking advantage really of the dollar weakness that we've seen in the latest week. And perhaps we've got a more equal playing field, because we've seen a variety of ECB members pushing back on rate cut bets, more rate cuts. They remain divided because inflation's still pretty much sticky. You would have seen euro, if you look at CPI here, let's just pull this up. Euro inflation remains sticky. Look, on a year-on-year basis, 2.9%, 2.5%, it's still sticky. So this supports euro to the upside, and we could more or less be breaking out of a potential, this channel here, which has been contained in the price. Look at the number of rejections there, bam, 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 bam. And you could have a trend line below here to the downside. Just you could mark this up as a wedge, however you want to look at it. But either way, we've got this resistance here. We've almost broken out of what we could view as a potential bull flag. Look at that, potential bull flag for euro. All right, and now we're just at key resistance at this around this psychological 108.50 area. Now, we could end up breaking out of that. Depends on the dollar as well. If the dollar underperforms, i.e. we see softer inflation, euro has a decent opportunity to potentially break out. And there's no reason as to why we can't be returning to sort of 109, 110, 111 even, where we commence this descent at the back end of 2023. So a lot of volatility expected for the euro dollar. GBP has been a decent performer across the board, particularly against the US dollar. And we had the UK elections last week where the Labour Party, as expected, won a very clear majority. So that provided some support as well for the pound. If you look here, as you can see, we're on an upward trajectory right now, a big weekly performance, the strongest that we've seen versus any other currency versus the dollar. We're going to be keeping an eye this week on UK GDP, which is expected to pick up in terms of growth there on a month-on-month to 0.2% from zero growth, okay? So that would be obviously supportive of upside for GBP. We do, if you look technically here, okay, this is a clear zone around this psychological, this early part of 128 where we're at now. Obviously, previously we have faltered here, but the way we're sort of breaking out, the momentum that we've got, we have every reason to potentially break out, you know, use this as new demand, break out, retest, and potentially go and challenge, move back above 130, that psychological 130 level, and go and challenge these highs here that we saw of July 2023. There's has every right and momentum to do so. And you could almost view this as well as a bit of a flag. You see, here's all of our pole, okay? And here's the flag. And typically when we are trading flags, we want to see the equivalent of the breakout to the upside of the pole, okay? So, you know, on this breakout, we could be very well heading into sort of 131 territory, all right? But keep an eye, obviously, the developments with the dollar as well. And the New Zealand dollar, we do have the RBNZ, so the central bank rate decision this week, where we're expecting still a bit of a pushback from the central bank, because one of the key reasons for that, i.e. a big talking point as we see globally, is inflation. You know, a number of central banks still want to bring inflation down before they entertain rate cuts. And the RBNZ obviously hasn't entertained the idea of rate cuts for now until inflation starts to really cool across the board. And it's just not quite doing that at the moment. It remains sticky. So keep an eye on that on Wednesday. If we do look at NZD, also finished in the green there versus the dollar, taking advantage of that dollar weakness. At the end of the day, the FOMC are moving closer towards rate cuts, but the RBNZ may not be quite yet. You can almost view this as a potential, you know, obviously all technical analysis is subjective, but we could view this as a bit of an inverse head and shoulders, the left shoulder there, the head, and this right shoulder forming. And we're kind of forming, if you look here as well, we're kind of forming a bit of a potential flag, which we're breaking out of to the upside to make a part of that right shoulder. So either way, we're at resistance here, as you can see. You can see that resistance there. We can put a zone around that sort of mid 61 region. So if we get a nice little clear breakout and retest of this range, we could very well be flying to the upside, firmly in towards 63 territory. Go and challenge these highs here of January 2024 and even of last year in July 2023. So if we do get that pushback from the RBNZ, that will likely support NZD to the upside. So once again, a week filled with volatility. Guys, I hope you have an amazing and blessed week, and I'll catch you on the next video.